Hi everyone. So it was a fantastic Union Budget 2025-26. It was not expected, but after the first, like the last budget in July 26, there was a lot of hue and cry in the market, at least from the middle class. There is no change in the income tax slabs. So it was a fantastic one by the Honorable FM Sitaramanji. Thank you for that, and congratulations to all, first of all. So, the voice was heard finally, and this is the outcome which we see. So, today we are going to discuss on the important aspects of GST, particularly what are the key changes. Though GST is ever changing, it always keeps changing, or some or other circular keep getting issued over the period after before the GST Council meetings. So there is not much in it, but of course there are a couple of points which requires the attention. Before starting that, let's go back to economic survey, which was issued a day prior to the budget. There were a couple of bold statements which were pronounced there, and that is directly coming from the economic survey itself. And this is not anybody who outside the government is saying. They are themselves saying that get out of the way, considering that excessive oversightness over the entrepreneurs while operating their businesses is hampering lot of uh, opportunities, lot of issues which are getting created because of excessive oversightness from the departments, various departments, not only tax department. There are a lot of compliances which a business needs to undertake. Particularly if you're a manufacturing entity, you would know how many types of compliances, or you can say licenses, you need to take. So there was another statement which was highlighted there in the economic survey, and which I like the most is there is the survey itself is saying that department needs to shift their mindset for the entrepreneurs from guilty until proven innocent to innocent until proven guilty. And this is the huge step. All right, if this statement gets understood by all the departmental authorities, I think that would be the best outcome. After stating this in economic survey, I think people might take this very seriously, and we can go to a society where there is a higher trust and low compliance. Okay, let's moving ahead. Of course, uh, there are four key growth drivers which was taken up in this budget: agriculture, MSMEs, investment, and exports. All right, I think there are a lot of missions, including Makhana mission, which is well spoken, or you can say heard about in Bihar. Along with that, national mission on high yielding seeds, cotton productivity mission, and many more. And the threshold limit for MSMEs, or you can say classification, is also increased substantially, which can because I think almost over 40% of the exports are handled by MSMEs. This shift might uh, improve the visibility of MSMEs and the business operation which they are going to undertake. Third is startup. The startup incorporation period is extended by 5 years. That is a welcome up move. Income tax rates, of course, there is a huge shift. Not even that 12.75 for the salaried person, but also there is a substantial increase in the slab. As we can see, the previous slab was of 15 lakh rupees. Over 15 lakh rupees, you need to make 30%, but now it has been moved significantly to 24 lakhs. That is a very broad move, and I think government has stated that they are going to forego almost 1 lakh crore because of this. But I think it is much needed approach, because a lakh rupees a month, it's basically expense in all the metros, I guess. So there are a lot of TDS, TCS rationalizing over there, and a lot of relaxation starting from this. LRS, which was much needed for the educational purposes. So there is no TDS or TCS on that right now, proposed to be. Okay, so starting with indirect tax, there is a proposed insertion of section 148A, which is talking about unique identification markings and traceability. It was discussed in 55th GST Council as well, that for the evasion prone goods like iron, copper, scrap, alloys, pan masala, tobacco, plywood, even paper, electronic, few electronic items. So there is a need to adopt a system wherein track and trace system can be there for the specific goods to avoid the evasion. So how it has to be done? So the section clearly has mentioned few things, but I think of course the detailed will be taken up in the rules, which will be framed subsequently. You'll have to affix a unique identification markings, maybe digitally or some other way. You'll have to maintain the records of those goods, and you will have to maintain the records that how much a machine has produced such kind of goods. Non-compliance will lead to, of course, penalty, that may be 1 lakh rupees or 10% of the tax payable, whichever is higher. So we need to wait and watch for this, for the details to come. But I think that will add up to additional compliance burden for all these goods. But of course, there is a need because government see that there is a lot of evasion in these goods. Next is your about vouchers, the taxability on the vouchers. Vouchers, for example, if you're buying any vouchers from Amazon or any specific voucher from Book My Show, all right? So there, there is a rule. There is a section 12 and 13 which specifically talked about the time of supply of those vouchers, which was clearly mentioned. All right. So if you are buying a Book My Show voucher, which is to be used to purchase the movie, and it is identified at the time of giving that voucher, so your time of supply triggers at that point itself, even when there is no supply at that moment. So all those, I think it is. So the reference, there are a lot of references to it. So there was a case law in 23 that was a Premier Sales Corporation which discussed about it. This, and then there was another circular which came up in December recently, which discussed in detail about the vouchers, the taxability of the vouchers, of course. And there were a lot of things which were cleared at that time. That the major point was that if you are trading in those vouchers, there is no taxability because the 9-month triggers when you have when there is a supply of goods, all right, supply of goods or services. But at the time of trading of the goods, for example, I'm a company who is selling vouchers of Amazon or any other company to somebody who is going to use it, and I'm not the end consumer. So uh, there is no time of supply in it. Only the commission or only whatever differential which I'm keeping it on, which I need to pay the GST. So that was already cleared. But now that all has been removed. There is no separate time of supply for such vouchers. All the default rules will be made applicable to it. But however, you need to see in case of services. All right, we have a rule which says if you are receiving payment or issuing invoice or doing service, whichever is earlier, the taxability triggers at that time. So some one has to see from that perspective as well for the supply of voucher in case of services. Moving ahead, so there was a penalty provision under 107 sub clause 6. The first proviso which stated 25% of the penalty, that was referred to section 129(3) with respect to detention of goods. But that has been replaced with the general penalty of 10%. That is good. But this has triggered that even there is no liability of tax and there is only demand of penalty, and if you want to go to first appellate or second appellate, you will have to make a pre-deposit on that particular penalty, 10%, and then subsequent additional 10%, 10% if you're going to GSTAT. So this is an additional burden. But maybe if you are not having even tax, but penalty will uh, towards penalty if you're going for any appeal, additional tax has to be additional pre-deposit has to be made. There are a few changes in the uh, definition, the local fund, municipal fund. One more very interesting thing which is going on since 55th GST Council meeting, and that was the result of Safari Retreats Private Limited case law with respect to 17.5D, which talked about block credit, and the interesting definition of plant or machinery. You can say plant or machinery and plant and machinery, and that was taken up very lightly, or you can say a funniest mode by the ministry, stating that it was a drafting error. But they have made retrospective change to it. So I think that will be that will have a lot of questions constitutionally, and we'll see. There would be a lot of writ petitions might have already been filed on this to take this up, or the applicability of this, at least from the retrospective perspective. Then we have section 34, which is about credit notes. Of course, as we discussed that as an income tax, it is self-assessed. So government also wants in GST that everything has to be self-assessed. And for that, keeping that in mind, I think after 2B, introduction of 2B, they have launched IMS as well. IMS facility is active as of now, but uh, needs to be seen how effective it is, because I see there are a lot of challenges right now there. And considering that in mind, so for credit notes, if credit note is issued, your tax liability will be reduced only when the other party has reduced or reversed their credit, and it can we can only see that happening through IMS. If you're issued your credit note and the other party has accepted this, I think that needs to be considered that they have accepted, but the additional condition has been put up where you can reduce your outward liability only when the other person has reversed the credit which they have availed at the first place. And then we have I think a clarificatory form of addition in schedule 3, but there was much needed thing that they've added the supply of goods warehoused in a SEZ or FTWZ zone before clearance for export or domestic use will not be considered as supply of goods or services retrospectively from 1st July 2017. So just before this particular entry, there was an entry with respect to warehouse goods, but there was a lot of not there was no clarity that whether warehouse will form like the SEZ and FTWZ forms part of warehouse, considering the definitions prescribed in SEZ and customs. But however, it is a very welcome move. But the people who have already paid taxes towards such supplies, they will not get any refund, I guess. But that is a welcome move. And in custom duty, I think there were a lot of rate changes, of course. And as you can see in the newspapers and all, that they have reduced like substantial rates for the manufacture of for the inputs used to manufacture phones or PCBs or certain EV products and all. I think that is also like welcome move again. I think these are the ones: cellular phones, import of various parts of cellular phones, and then inputs for use in manufacture of open cells of TV panels. Uh, Interactive flat panel display, of course, has been increased from 10 to 20%, which is going to impact a lot of people, maybe who are into the manufacturing of this in India. Parts of electronic toys, of course, has been reduced substantially to promote the manufacturing of electronic toys in India. And there are a couple of changes in Section 18A, which is also welcome move, wherein they have allowed voluntary revision of entry, bill of entry, post clearance as well. So these were the highlights for the budget. Let us know if you need any clarification. Happy to address. Thank you so much.